Cameron Brandt is now with us, Director of Research at EPFR Global. Cameron, good to have you with us here. Prashant this side. Thanks for joining us as always. Let's start with the FII selling we've seen in India, and is the bulk of it done? Now, the assumption in my question is that bulk of this $11 billion of which FIIs have sold over the last, actually in October so far, has been to actually move that money to China. Has that adjustment largely taken place? Is there any way to know, Cameron?
Well, I obviously speak from a mutual fund and ETF perspective, and that rotation narrative is really never particularly strong within the data I look at. And in fact, what we've seen in the past 2 weeks is somewhere close to 10 billion flow out of China equity funds, while flows into India funds were certainly much less robust than they've been for a long time. We're somewhat neutral. So I actually think that the big at the moment is that people are finally paying attention to and positioning for the rather uncertain outcome of the presidential election in less than 2 weeks. This past week, we've seen a lot higher interest levels for derivative funds, cryptocurrency funds, gold and silver funds, and country funds dedicated to developed markets that historically have been viewed in a slightly safe haven perspective. And obviously, the US is a little off the table on that score until the electoral process goes through.
Cameron, hi, morning. So give us some perspective on the kind of flows that China has been drawing. I'm guessing they were really hitting a big high about 2-3 weeks back when the whole talk of stimulus started. But now we don't know. We don't know if they're doing another round or not. So what is the positioning on China?
So the position in China was a tremendous pursue those stimulus announcements you just referenced. We saw record-setting inflow of 40 billion in the first week of October, but since then the flows have reversed. I think, given the long spell of underperformance by Chinese markets, there were a lot of people waiting for some gains to sell into. And they haven't been slow to do that. Nevertheless, the 2 weeks of outflows is only about a quarter of what flowed in 1 week. So there's certainly a fair amount of liquidity in Chinese equity markets that wasn't there a month ago. But what have you done for me lately seems to be the guiding spirit, certainly among Chinese domestic investors, and they seem to be honestly being pretty demanding about what it will take for them to start plunging back in.
No, absolutely. Cameron, we'll leave it there. Good conversation as always. Thank you very much for joining in.